Hi guys, and welcome back to this beginner's guide to Forex trading. In this second part of our guide, I'm going to be talking more about market analysis. So we're going to be discussing how do you analyze the market, how do you get to a decision to enter into trades. So we're going to talk about fundamental analysis. We're going to be talking about technical analysis. So what is Forex analysis? Forex analysis examines the changes in currency pairs, prices, and attempts to isolate which direction prices are going and where they may go in the future. In the Forex market, traders buy and sell currencies with the goal of making a profit. The foreign exchange market, which is the largest market in the world, handles over $5 trillion daily. Banks, commercial companies, investment management firms, hedge funds, and retail traders use Forex analysis to determine the best trade for a currency pair at any given time or opportunity. Some Forex analysis is manual, some is performed by AI software, that's artificial intelligence, which analyzes historical data. Some traders use a combination of both manual analysis and AI-driven analysis. Forex analysis is attempting to predict or profit from currency pair movements. Traders use Forex analysis to determine which currency within a pair is likely to be stronger. They will buy that currency and sell the weaker currency. For example, if the euro is expected to rise against the United States dollar, then a trader would buy euro USD. If they thought euro was going to be weaker than US dollar, then they would sell euro US dollar. The first currency listed in a pair is the directional currency. So this is going to determine whether you're going to be bullish or bearish on an asset. If the first currency rises relative to the second, the exchange rate is increasing, meaning it's appreciating in value. If the first currency falls relative to the second currency, the exchange rate is decreasing, meaning it's depreciating in value. So how then do you analyze the market? It is impossible to make a profit on Forex without a clear understanding of what currency trading analysis is, its implementation, and the determination of trends on different time frame. Therefore, traders use various tools and methods to predict future price variations. Forex market analysis is the study of the market to assess price, supply and demand, sentiment, and behavior of its participants, and also market conditions. To correctly use the methods of analysis of all financial markets, a trader must study the factors that influence changes in the market situation and the formation of new trends in the currency pair in question. Very often, rookie traders try to look for insider information or follow the trends and practices of other more successful associates, not understanding the root causes of their success. We have seen this increasing a lot from like 2-3 years ago. We have seen a lot of people offering signals. So most people who are starting in this industry, they only look for signals to trade without knowing how has that signal been taken, why they decided to either go long or short on a certain asset. So this path may seem easy, but it will only lead to mistakes and loss of money. The less money a rookie trader spends on this lesson, the better. If you spend less money in teaching yourself, in the near future, you're going to see the benefits of it. If you want to jump from signal supplier to signal supplier, you're going to spend even way more money than what you'd actually spend on training. If you want to save money, you need to analyze and develop ideas for trading in the foreign exchange market. Using charts and analytics is an ideal way to develop a forex trading strategy. There are two main types of analysis in the current market. Number one, technical analysis, and number two, fundamental analysis. There's also sentiment analysis, but in this beginner's guide, we will focus on the main two, which is technical analysis and fundamental analysis. So let's take a look at fundamental analysis. So this is the analysis of the forex market, which allows identifying the development of trends as in direction in various markets using fundamental economic and political factors. The purpose of the fundamental analysis can be called the definition of a fair rate, which will be as accurate as possible to the general state of the market. It is most advisable to use fundamental analysis methods in long-term strategies. Mainly for swing traders, fundamental analysis is a more favorable type of analysis, as in the short term they don't allow to determine the optimum entry points into the market. At the same time, the analysis of changes in fundamental economic indicators and indicators can help to determine the long-term trend at the very beginning of its development. Fundamental analysis is a good assistant for a trader. Right. So there's factors that should be taken into account for the fundamental analysis, which can be divided into the following. We've got economic indicators. So these are indicators of economic growth, which is GDP, the index of leading indicators. We've got, for example, the Dow industry, or we've got the dollar index. We've got the technical indicators. We also have central bank policy factor. This one is very crucial in terms of fundamental analysis. Speeches of central bank heads. We've got people like Powell, Draghi. You see, when those guys, when they speak, you need to be in a position to be listening and understand what they are talking about. So we've got speeches of central bank heads, IMF experts, and government ministers. We also have political events that affect the economies of countries. So if you are trading, for instance, Euro USD, you need to be in a position to understand what's happening probably in the American political scene, maybe between the Democrats and the Republicans. You see, those are like political events. And then we also have environmental disasters and natural calamities. So at the time of this recording, we've got the coronavirus sweeping all over across the globe. So this can be attributed to this factor here, natural calamities. So you can see the effect that the coronavirus has had on the market. National Economic Analysis Bureau and international institutions regularly publish values of various economic indicators and indicators of different countries, providing new data annually, quarterly, or monthly. The most important economic indicators, of economic growth are the gross national product, the GNP, then we've got the gross domestic product, the GDP, and then we've got industrial production index, and then we also have business activity. The most important indices of leading indicators show the general outlook for the economy. The growth leads to an appreciation of the national currency of that country. Major leading indicators cover initial claims of unemployment benefits, jobless claims, commodity price index, CPI, and consumer expectation index, which is the consumer confidence. Undoubtedly, an important aspect influencing the rates of national currencies is inflation indicators. This category of indicators includes the CPI, Consumer Price Index, the PPI, Producer Price Index, and retail sales. The main indicators of consumer activity include the volume of consumer loan issued, which is classified as the consumer credit, income and expenditures per capita, which is known as personal income and personal spending, and indexes of business activities. Indexes are published by leading research institutions and national economic analysis. So when we are talking of these economic indicators, there are some of them that we classify as high impact news events, which means when these events are released, when the data on these events is released, then you're gonna see high volatility in the market. So we've got the GDP, we've got the CPI, we've got the NFP, which is the non-farm payroll, the one for American jobs. Then we've got the retail sales, we've got the PPI, the Producer Price Index, and we've got the interest rates. So these are very high impact news which you're supposed to take note of if they are being released towards maybe you want to open a position. You must make sure you know that there's certain news that are coming. Like for instance, if you know that the Federal Reserve is meeting and they're gonna revise the interest rates, then you need to put that into account if you're going to be participating in the market. All fundamental factors can be divided into short and long cycle factors. Short cycle factors include daily economic news that affect the market during several trading sessions, causing currency pairs to move in the lower time frames. The long cycle is influenced by important macroeconomic indicators and political news. Also, economic and political news can be expected or planned, as well as unexpected or random. Moreover, an economic calendar always reflects both the actual and anticipated value of the published parameter. This is done so that a trader or analyst can determine how well the market expectations regarding the value of a published fundamental factor have been met, and, depending on this, make conclusions about how it will affect the rate of the currency to which it is directly related to. When you consider the release of fundamental news, keep in mind how it may affect the future movement of interest rates. When investors are prone to risk, higher interest rates can mean more investments in the currency of a given country, which can lead to an increase in its rate. When investors are not risk prone, money is invested in other safe haven currency. So you can see that if a country has got a good economy, the currency generally has got high value. If a country has got a bad economy, then you're going to see a lower currency value in that economy. A good example is Zimbabwe, which has got a lower currency value due to a bad economy. Secondly, there is technical analysis. So we have been speaking about fundamental analysis. Now, the second type of analysis that we are going to cover is technical analysis. So what is technical analysis? It is the study of previous market courts using mathematical and statistical tools for forecasting future prices. Unlike fundamental analysis, technical analysis does not consider the reasons for changes in the market situation, but analyzes only the current price movement using historical patterns. It states that any action by market participants affects price changes, which can be predicted using various graphical models, lines, and indicators. With the help of accurate forex analysis, any trader can get an informative picture of the market based on the technical analysis of the current and previous price charts. Technical analysis tools allow you to find with high precision the best moments for trading on different time frames. The principal postulates of technical analysis say that the price takes into account all the information that comes to the market. The price movement is subject to trends, and the main thing is that history mainly repeats itself. There are quite a few technical analysis tools that can be divided into the following main groups. Number one, we've got trend lines and support and resistance levels. These are technical analysis tools. We've got graphical models, we've got candlestick patterns, we've got technical analysis indicators, we've got wave technical analysis. So what are the concepts of technical analysis? What makes up technical analysis? So we've got the Elliott wave theory, we've got chart types whereby we have candlesticks, we've got bar charts, we've got ticks, and we also have a line chart. Then we've got price patterns, you see, for instance, head and shoulder patterns, inverted head and shoulder patterns. Then we've got technical indicators. Then we have support and resistance. Then we've got indicators such as the MACD, the relative strength index, RSI. We've got the Bollinger Bands. You see, these are the concepts that makes up some of the technical analysis that you can be in a position to do. So in summary, there's a difference of opinion between enthusiasts of fundamental and technical analysis of the forex market. Most people, they're always arguing against each other, saying, okay, no, fundamental analysis is better than technical analysis. Generally, for me, I would say this all comes down to you as a trader. Like, you have to determine which one works for you. Like, in my own opinion, I always tell some of my students that fundamental analysis most of the time They fulfill what the technical chart is predicting. Fundamentalists believe that the price history cannot predict further price movements, and technicians claim that the price chart originally contains everything. Among other things, there's such an interesting type of market analysis as investor sentiment analysis. In our opinion, we should not give up any of these forex currency analysis without first trying it out in practice. A combination of several types of currency analysis to the extent that suits you would be an ideal option. So as we go further into the course, you're going to see that we are going to be focusing more on fundamental and technical, and I'll be showing you in further detail how you can link the two in order to come up to a decision to say, okay, I'm going to go long on USDJPY because of so and so and so. And then when you look at the chart, you'll be like, okay, I'm at this level, we're at this zone, and we've got this fundamental coming through, which will probably go in this direction. So then you make a decision on which direction you are going to take on your trade. So this was the first part in our second section. So I hope to see you in the next section as we move forward in this beginner's guide to forex trading. Thank you, and see you in the next part.